Jacobus Brink from Schmidt joins us now for a look into the day's trading session. Jacobus, hi, good to chat to you once again. Good to have you back on the close.
Hey, thanks so much for having me. It is indeed a interesting one to be on today, to say the least.
It's very interesting. Now, who knew we would get up on Saturday morning and all of a sudden the US had gone into Venezuela, then arrested the president and the first lady. So how is this impacting on the market? Because when the US does something like that, well, the world feels it.
Yeah, no, definitely. I must say, it was almost the first black swan event, if you will, that we've seen in a while. Markets, I think most of the investors were lying awake on Saturday evening, wondering what was going to happen this morning. But, other than gold really rallying, it seems to be business as usual. We started off this morning, as I mentioned, gold, typically the crisis hedge, as you would expect, was up. I think there was sort of a very much confusion on what the oil price was going to do because, in the long run, it should be beneficial for the supply of oil. So some was expecting it to be down, and some were expecting it to be up, sort of crisis mode. But that didn't play out at all. And we saw Asian markets this morning actually quite strongly in the green, on some semiconductor news and just the general sort of sentiment out of China seeming to be positive. So, quite an interesting turn of events this morning.
Yeah. Are the markets starting to factor in US President Donald Trump and what he does? Because this is not his first rodeo. He's done this before. Not this before, but he is quite robust, if I can put it that way. Are we getting just used to him and there he goes again?
I think robust is one way to put it. I wouldn't necessarily reiterate that, but no, I do think so to some extent. We obviously we saw less of it, I think, in the first Trump presidency, but definitely last year, post the tariff liberation day, Rose Garden speech, and just throughout the year, he seems to be fairly unpredictable, and I think markets are sort of starting to, get used to him, as you just mentioned. But it's definitely always been, since his first term as president, there's always been a U.S. first type of thing. And I think the term that started popping up again, especially over the weekend, is the Monroe Doctrine. So just basically trying to counter any Eastern influence, and I'm saying Eastern very broadly because it's China, it's Russia, it's even Iran. Trying to some extent counter their influence in the Western Hemisphere, and very much putting an America first type of view out there.
Yeah.
So I think, to some extent, the markets are actually just getting used to Trump, but this one was a bit of a surprise, even though, in hindsight, everything's obviously 2020. And in hindsight, there was some, talks of already looking at Venezuela more specifically during his first term as presidency and into 2020 as well. So, so I think very much surprised the market, but not acting too surprisingly.
One thing that could be affected is oil. So we've seen with Venezuela, I was looking at the story earlier on where Venezuela is stopping now because they can't sell their oil because everything's being blockaded. So what happens to the oil price? I mean, what are we looking at? It's great for us in South Africa. We're seeing these beautiful petrol and diesel cuts, but what happens now?
Yeah, no, I think, oil was quite an interesting one because, I mean, if you just were on social media at all over the weekend, the first sort of headline everyone flashed was, the US is now in control of the largest oil reserve in the world, something like 300 million barrels or something, absolutely crazy. But the thing is, Venezuela currently, their supply of oil to the world, and even though they are part of the OPEC cartel, their supply of oil to the world has been very limited for a number of years now, post the Hugo Chavez years, actually, purely because of the fact that the industries have been in such a decline, specifically in Venezuela. There hasn't been a lot of investment in there. So I think, just the immediate sort of impact for oil is not a case of you see just this massive oil reserve and all of a sudden, that supply is just coming off the market. There's been very minimal supply from Venezuela. And I think the longer term structural story would probably be more supply coming out of there. But I mean, even that's going to take quite a while because Trump did indicate that the likes of Chevron, etc., are going to go in there and they're going to invest an enormous amount of money into the oil infrastructure in Venezuela. But I mean, that's going to take another 10 odd years. So I think the market, perhaps the reaction with oil down this morning was the market pricing in a slight increase in supply in the longer term. But I mean, it's difficult to see anything that this would really make a massive influence in the short term, at least.
Yeah, of course, gold is the safe haven. Can the gold price go up any more? Because we've seen it skyrocket and skyrocket because of turmoil in Ukraine. Well, now enter the United States.
Yeah, yeah, gold indeed was quite the trade to be in over the last, not only last year. I mean, it was up to quite almost 60% last year, but it's been the last 2 years recently that it's been on such a run. And I think a lot of that's got to do just with the geopolitical landscape we are in. And, bringing it back to the Monroe Doctrine, I don't think that's doing anyone any favors with regards to geopolitical uncertainty. So I think for the time being, as long as there is such large uncertainty, I mean, there's other things also going on. What does this Venezuela act now mean for the Taiwan-China relation? So I think all of this actually done is just put more disarray, more confusion and uncertainty in the minds of investors. So I think gold still has quite a bit to run.
We've been talking about the rand this evening on the close. We've been talking about the rand to the dollar. The rand, of course, is at great levels. We have, however, gone and told the United States that we're reporting them to the United Nations. There could be consternation between our two countries. Will this affect our rand, or is it just a weak dollar and that's the bottom line?
The rand was actually an interesting one this morning because most of the Latin American currencies actually sold off quite severely. We saw the Mexican peso down quite a bit, the Brazilian real down quite a bit. Markets just pricing in that sort of LatAm risk premium, I think. And the rand, funny enough, was just on a tear. And we had a strong dollar. People did flock into the dollar, as well as gold. So the rand seems to be structurally strong here. And although yes, we've seen massive appreciation already, into the last year, we are obviously very much tied to the gold price. So I think if we can, from a structural point of view, there's already a lot of bullish sentiment baked into the rand. The markets seem to be grasping the idea that okay, maybe this government of national unity and South Africa as a whole is not such a bad place to be. So we could still see some downside to the rand, but yeah, at these levels, it has had quite a run. So I wouldn't be surprised if we saw a little bit of a pullback. But I think from a structural point of view, the rand has very much trended from where we were a few years ago.
So to have a look at investor sentiment now. So we've got a stronger rand. We've come off the grey list as well. South Africa is looking as a good place to invest. We're looking at kind of somewhere where you want to put your money. Things have changed, haven't they, over the past year or so?
Yeah, I know, indeed. I think exactly to the reason that you just mentioned. There was a lot of positives for the country last year, and I think sort of the cherry on the cake was the GDP growth numbers we saw in the fourth quarter of last year. So it does seem from structurally whether South Africa has turned a corner. We've also things like if we can get the Transnet thing right, some logistical issues and hiccups that we had over the past number of years, it does seem like we've turned the corner. I think another one to mention is the fact that we've actually now decreased the inflation targeting to the lower end of that band that it used to be at. And I think all of this bodes well for the country. Now I think the big thing for us to just see is foreigners actually starting to pick up on that story as well. What we've seen over the past year or so still was not massive buying of equities from foreigners. In fact, I think our weighting, the MSCI Emerging Market Index, decreased slightly with some of the other markets outperforming so much. So no, I'm very much a SA Inc. bull at this stage, and I think we can even see a few of the laggards from last year, the retailers, etc., have a good run this year. You know, if we see some more rate cuts, structurally higher growth, improvement in infrastructure, you know, those are all recipe, all things for a very good outcome this year.
We do still, though, have one or two headwinds. Our ferrochrome smelters, it's a bit of a problem at the moment because Eskom needs to bring down their prices. If they do that, perhaps they could also benefit other industry and make us even more attractive.
No, definitely. You know, I think luckily we are, you know, a country that we very much all of the resources that are currently running very strong. We are producers of, you know, some of them even the largest in the world. But yeah, no, definitely, you know, it's been a resources and a PGM sort of specific story over the last year or so. And to your point exactly, you know, it's if we can get some of these other things going as well, then it'll just make it more attractive, and the entire resource complex can sort of start to re-rate as opposed to just some of the precious metals and the PGMs.
Yeah, right. Your stock pick, where are you placing your money at the moment? Because it's a brand new year. Where is your Jacobus looking at the moment?
So I've started with talking my book a little bit. So I think, you know, SA Inc. is definitely one to look at this year, and specifically my stock pick for the day or for the year, if you like, because we have gone overweight it in our portfolios, is Pepkor. You know, I think they are the undisputed kings of South African value, the value segment as such. And I think they're busy undergoing a massive structural transformation. They hit 6,000 stores last year, looking at adding another 300 this year. I think the big optionality we do have there is the fintech engine and the banking license specifically. I mean, we saw, I think it was about 60 billion rand in throughput just from their Flash platform. And, you know, still growing earnings fairly decently, and, you know, trying to get a bit of a premium, you know, at the moment, but I think it's warranted, and definitely I think Pepkor is one to look at for the year.
Yep, I love it. Jacobus Brink, thank you so much. Good to chat to you once again. Our first interview for 2026. I'm sure we'll chat quite a few more times. Thanks so much for joining us. Thank you.
Thanks a lot.
That was Jacobus Brink from ShareNet.